Good morning, traders. It is 7:51 a.m. Chicago time on the 1st of September 2015. It's a Tuesday, beginning of the month. Thanks for joining me. And as many of you know, I've been away for the last week and a half or so. I left on vacation, my first vacation in 2 years, on the 19th, and I came back last night. So, in looking at what the market has done over the last couple of weeks, I decided to start this trader by 10 minutes early, just in case I go over time. I myself need at least 15 minutes to do some exercises and things before the market opens. And so I figured I'd start early and let you go early as well. So, let's start by saying derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. I feel a bit rusty. I did not spend very much time last night going through the charts as I normally do on Sunday. I was up for almost 23 hours flying back, and so I was not very coherent. So a lot of it I tried to squeeze in this morning. So I don't have a comprehensive analysis here, but what I'll do is to open up Thursday's Ask a Question session, which is an AMA for Stage 5's members that happens every week. I'll open that up to the public and then go over some statistics and some studies that I'll complete between now and Thursday to show how this the action over the last couple weeks. Incidentally, the craziness occurred just a day after I left, so I'm insulted by the market. But I can't cover it all today. But there's a lot going on. There's some interesting structures that have taken place, so I'll cover those. Let's start out with our normal routine. Let's go over the news overnight. The key elements from last night are PMI manufacturing beats in Germany, 53.3 versus 53.2 flash, and manufacturing misses in the Eurozone at 52.3 versus 52.4. China's August PMI manufacturing in line with the expectation of 49.7. The People's Bank of China continued to inject 140 billion Chinese yen through repos and will force any banks trading FX forwards to hold FX reserves in the US dollar at a 20% rate from mid-October, therefore discouraging the speculation on currency. July unemployment rate in Europe came in at 10.9 versus 11.1. This is the lowest it's been since February 2012. Those are the key elements from last night. Looking ahead today, we've got manufacturing PMI at U.S. manufacturing PMI at 8:45 Central, just 15 minutes after the open, expecting 52.9. At 9 Central, a half hour after the open, 10 Eastern, we're expecting 0.6% on construction spending, IBD tip at 47.5, and ISM manufacturing 52.5, ISM prices paid at 39. And we're also expecting Fed Speaker Rosengren to speak on the economic outlook in New York City at 12:10 p.m. Central, 1:10 Eastern. That's what's on deck for today. Since this is the first trader bite of the week, let's look at the rest of the week. Tomorrow, Wednesday, we're looking for ADP in the morning, non-farm productivity, ISM New York, factory orders, crude oil, and beige book. Thursday, we get German services PMI, Euro retail sales. We have the ECB announcement and conference, which is likely to bring in some extra volatility. U.S. trade balance, U.S. services PMI, and ISM non-manufacturing. And on Friday is a big day. First, we get German construction PMI, which is not a huge thing, but we do get U.S. non-farm payrolls and the unemployment rate on Friday. Let's switch gears here and start looking at charts, which is where the real story is, unless you're a fundamental trader, in which case you don't care about the charts and you wouldn't be listening. So let's back this up. By the way, Is anyone aware of what's going on in crude oil? It's quite incredible what's happened over the last 3 days. Crude oil hit a low of 37.75. I'm tracking the October 2015 contract. That's the front month. And, crude oil has been quite an amazing story here. You could see, as I squish it down, you could see the shape of this product from a high of 117.07, dropping down to 37.75. 37.75. It's just a massive drop. But over the last couple of days, it has rallied from 37.75 to a high of 49.30. 49.30 from 37.75 to 49.30. $12 or 30%, 33% over the last week or so. With yesterday, if we look at yesterday's action, I was on an airplane most of yesterday, so I didn't look at this at all. But if you look at yesterday's action, this black line here represents crude oil. All these, this is my index chart. It just pulls in. It starts at 8:30 Central when the cash opens on Wall Street, and and so right here it's at 0, and it basically tracks the relative percent relationship between products. And what you see here is crude oil making a move yesterday. It peaked out at 10% positive from the 8:30 open, and it had a swing of almost 13% from there to there. So if you're going to gas up, if you're going to fill up your Hummer or whatever, you better do it today, because RBOB's likely to move in sympathy with this. And there was a lot of talk overnight on the wire with regards to OPEC nations getting together and normalizing some of these rates. But yesterday's action is quite remarkable in crude oil. I thought I should bring that up before I get too far in depth. Let's erase those scribbles. So something to watch here. Very, very interesting. But overall, let's take a look at the big picture. Well, let me start you out with a monthly profile. Okay, we don't look at this often, but what this chart is a monthly profile of each month. So you can see August over here, very wide-ranging month, from about 2109 to the low of 1831 or so. The widest ranging month in a long, long time. Wider ranging than last October. Last October's volatility was quite heavy, and the volatility that has occurred over the last 2 weeks is much bigger. And what we've done is we've moved away from the balance zone, which we've had since February. So you can see February here, the gap. This was February 13th on this gap here. And since we have February, we have February, March, April, May, June, July, August, just absolutely stuck in this grindy, low volatility, swing up, swing down, balance zone, and we broke out of it in August in a matter of a couple days, and we have multiplied that balance zone. The energy that was built up in here was multiplied multiple times. That energy was expended very quickly in this move down to 1831. So from top to bottom, the market has moved 200 points, and in the balance zone that we've been stuck in, you can see it right here. The big balance zone has been 100 points deep from February 13th, so twice as much in just a few days, in just a week. So when we look back at what we have done since February of 2013, this is what we've done. We've basically, we're starting at this low. We've moved up very methodically. We've just, here's the October action. We've recovered from it in November, December, and we've been sideways through January. Then we popped up in February, and we've basically been stuck up here since February. Very methodical rally, very good control by the long-term OTF, taking advantage of the consistent rally. And we'll look at volumes in a minute, but overall, this break lower says a lot. Says a lot to me. The market is still unstable right now. I know a lot are going out there and talking about the probability of a recovery right away, and this is just a small correction and so on, and it may be so. But last week, as I was trying to keep track of the market, um, on my smartphone, I posted that I believe that the market's showing strength in the short term, and 1997.50 is the next key test area, and then beyond there, 2019. I posted this on the 28th at 4:30 p.m. and this is the period. Um, this is the period when the market's still recovering. But my overall view is that this impulsive move down is not done, and the expectation, unless, and this is a big issue with the auction, is intervention. The powers that be, the money holders around the globe, do not like loss of value, depreciation of value, and so there's a lot that happens that could happen that could thwart the actual auction. But overall, what we have here is an impulsive move down. The expectation is a pullback to that 1997, which was right here. We pulled back up to, looks like, 2091, so we missed by 6 points there, and then the expectation is for it to roll over, get back into the balance here. The point of control, this balance is just above us at 32. We're trading right now at 17. We were just trading at 26, and the expectation is for it to work its way, to get stuck here and work its way through this balance, and then retest and finally get to this CHVN, which we missed by a couple points last 2 weeks ago. The CHVN down there is 1828, 1827, and I expect this to complete that move. So that's what I'm looking for, longer termish, intermediate term, over the next week or two or whatever. But again, I say that, and I'm kind of hesitant to say that, because I know that when we look to the downside, we're essentially betting against central banks and some very, very strong interest in this being, a small summer cleanup, small summer cleanse, a pullback, a potential for a higher low, probably in the 1866 area here, and then for it to recover and get back in balance and get back up to where it last saw value up in 93.75 or so. The powers that be, this is what they would like to see. I don't know how many bullets they have or how much ammo they have to make that happen, but if this auction was to happen naturally, we expect it to pull back, and we expect a lower low to take this out, and that's what I'm looking for over the next couple weeks. Remember, what I'm talking about here has to do with time frames, right? So depending on your time frame, what I'm saying may or may not make sense. In other words, for someone who's thinking in a day time frame, taking what I just said and just getting short whatever they can get short on may not work, because the time frame I'm discussing here is a little bit longer term. You got to trade what you see, not what you think. You got to trade the next expected move of what you see. More technically said, you have to see what is happening, look at what the price action is saying, and then trade the next expected or the next highest probability move from what you see. This is an overnight chart. So we've been in balance here for the last 3 days or so. The last 3 days have been balancing up here, and the overnight session, the highest it got is 92.75 on the overnight, 91 on the day session, and then the market basically opened in a drive this morning. The opening print is basically the high print, just 3 ticks. Delta went negative right away. It chopped around. For a short period of time. Remember, my open is the 5 a.m. or 5 p.m. Central, 6 p.m. Eastern open on the futures. Not much goes on at that time, but you could see that the drive occurred pretty strongly, and we have what is called a B-shaped profile, which is a long liquidation profile. This movement here supports further exploration down, and when we look to see what's below, we have a decent level below at 94. The next decent area to test is 94. So when we look at the overall picture, and I'm going to switch gears here for a second. So when we look at the weekly profile, so these are weekly profiles here. You can see week after week after week of balance up here. And then the market broke lower the week that I left, the week of the 17th, and has dropped. You could see this is a very clear, each color represents a day of the week, and you can see this is a very clear trend. And then overall, the market balanced for a couple of days, and the market broke lower. Broke lower and then balanced for a couple of days as it moved up back into this profile. This is where that 97.50 comes from. It's this key area up here, and what it has done is to balance down here the 24th, and these are composite profiles here. I've merged these profiles together to make up the week, and then you could see here that we chopped around yesterday, and then we've broken lower, and we're trading down here right now. And so what we've done is we've broken through this small LVN, this key LVN, and we are in this balance area, and I expect us to test this balance area through and chop around. Again, if there's no intervention or whatever, then I expect it to get back down and take out these single prints from 1856 downwards to make new lows beyond 1831. That's a lot of information, I know, but that's how things are setting up. There's a fair amount of energy that's already built up into this. You could see this over the last few days. I'll draw a profile around this balance zone here. The last few days have been well balanced, 5.64 million. And speaking of volume, let's look at that for a second. Look at our statistics. This chart, this profile down here, is keeping track of the statistics with regards to what is normal and what is abnormal or bigger than 1 standard deviation range. The range that we had on these big moves here is 3+ standard deviation moves. These are very, very unusual moves, and normally based on this chart here, our normal range has been our normal range is around 11-12 points. 1 standard deviation is at 31 now, which has increased quite a bit, and 2 standard deviations, meaning 95.45% of the days since October 9th, 2013, 95.45% of those days, it was at 51 points or less per day in range, and the most common range is around 11.25 points, and the normal range is around 31 points down to about 4 or 5 points is considered fairly common in this range. I need to check this. It doesn't make a full sense to me, but on the downside should be higher. So that's range-wise, the range that we had is incredibly high, unusually high, and we saw a spike in the VIX and all that because of it. But as far as volume, we saw the same thing with volume where, let's drag this up here. We saw the same thing in volume where the volume spiked up to about 4 million contracts on this big day here, which again is almost completely is unprecedented since October of 2013. The normal range of volume is 800,000 to 1.6 million, with the most common being about 1 million contracts a day in the S&P. Remember, this is RTH only. I don't consider the overnight. One of the statistics that I'm going to work on is how much of the range is occurring overnight and how tradable is it. I'll share that with you when it's done. But overall, these last couple days, have been pretty steady, pretty common, balanced days, and now we've broken lower. So the expectation is for the market to continue to turn lower, and for volume to continue to be higher than usual, and for the range to be higher than usual, volatility be higher than usual, which means that you have to account for that in your trading plan and in your stops. The next area we're involved in is right here, and we are below the point of control of this area, which is in the 1932 is the point of control of this area, and we're below that. We're trading 1919 with 1951. When you combine these two profiles, 1951 becomes the LVN. So what does that mean? As long as the market remains underneath 1951, the intermediate time frame is likely to favor the downside, the sell side. In other words, selling pullbacks into that area, and that's what I'm looking for today. I'm going to look to sell pullbacks with a target of 1894 as the key target for today. That is the most recent most accepted price in the area. It's 8:13 a.m. I've used up all my time plus some. I leave you with that. I will continue to catch up on this stuff and look for an invitation to the Thursday webinar where I'll go into this in more depth, but I don't want to leave your head spinning with all this information. But the primary hypothesis for today is to look for any tests up, and I'm going to look for weakness for a short. The primary target's 1894, secondary target 1872. That gives us pretty decent range for a daily range, unless participants really start pushing. I do not expect the kind of movement that we've had in the past couple of weeks to continue going forward. I expect a steady, more controlled sell-off if it does occur, but I also expect to keep a close ear on the news. The news are so important right now. So a lot of stuff going on with that could come across with interventions and government interference in the market. I'll leave you with that. Good luck, and glad you're able to join me today. Take care.